Hello again. I'm Todd Goldman, and this is the third episode in the video series Finding the Right Advisor for You and Your Wealth. In the first video of this series, I provided an overview of a 7-step process that was designed to help you identify the financial service provider or advisor that's most suited for your situation. And in this episode, we'll be covering the first step in that process, which is determining your needs. But honestly, before we get too far in the discussion, I do want to point out that truthfully, most people can manage their own wealth if they have the time, the interest, and the ability to manage their emotions. Fear and greed, of course, being the most dominant. Now, what's hard to replicate if you are doing it yourself is the experience and perspective that's provided by a third party, someone that's perhaps seen it before and can provide a less emotional point of view when deciding or helping you decide a course of action. In a perfect world, everybody would have someone that they could bounce their ideas off of, but the reality is that getting professional advice and guidance does have a cost associated with it. So what we're going to focus on in this discussion is, at what point does the involvement of a third party shift from being a want to a need? Hopefully by the end of this video, you should have a pretty good sense of at least the minimum level of service you need to seek out. So let's explore that. And why don't we start, though, first with looking at just a few of the life events that might prompt you to seek out additional help managing your wealth. And, from there, we'll explore how these situations might inform your decisions. So we'll start with what I just term organic growth. This is just growth in your financial situation that comes about in a very natural fashion. Now, that may be getting a new job with higher pay, maybe new benefits. You're able to sock away more money, and you can actually start doing some investing there. Or sometimes a new job results in the ability to roll over a 401k from a previous employer. It becomes an IRA. You can basically take over management of it yourself. Under those circumstances, sometimes you need guidance. Growing wealth, as I mentioned, just sometimes you're accumulating more money. And then the other scenario would be just sometimes if you've been doing it yourself for a while, it's possible that you just realize that you no longer have the time, or you need some expertise, beyond what you're able to glean or process yourself. The next category would be dissatisfaction with your current advisor. Perhaps you're already working with somebody and you may have grown tired of them for a number of reasons. It could be tied to the level of service that they're providing. Maybe it's no longer adequate. Maybe they're not returning your phone calls with the frequency that you like or desire. If it could be performance related, perhaps you feel that their investments aren't living up to your expectations or the expectations that they set when they started the relationship. Or perhaps you've just outgrown their capabilities. You are at a point now where you can't get by with just the traditional portfolio. Maybe you need additional strategies or more sophisticated investment solution. The other big event or scenario that prompts looking for an advisor is the liquidity event. This could be anything from an inheritance. If you have a lot of stock options, maybe they vested and you're ready to exercise those. Business sale. If you own a business and you're selling it, you're going to have a big influx of cash potentially. Or if you have real estate that you've owned and are selling that, and it's going from an illiquid piece of real estate to you need it as part of a liquid portfolio. And the last common reason that you might seek out an advisor would be a change in your family situation. And that could be anything from getting married or divorced. You've got a child that's been born, or unfortunately, the death of a spouse. These are some big changes in life that oftentimes necessitate bringing in someone else to provide guidance, either for a short period of time on a kind of a transactional basis, or perhaps for a long-term investment relationship. Now, once again, I'm just going to quickly review what it is you are buying when you hire an advisor or an investment firm. I covered this in the previous video, but you've got implementation, advice, access, and concierge services. Now, the definitions of those, just to, again, quickly review them. Implementation is the actual buying and selling of stuff or getting loans. The advice is any guidance that you're going to get around what to buy or own or trade. Access is the ability to gain, being allowed to invest in a particular type of investment that maybe not everyone has access to. And then the last is, of course, concierge service, the bookkeeping, tax prep, and property management, things of that nature. Now, depending on what component you are looking to do, whatever your need is, once you've identified that, some of these things you can do yourself, some of them you can't. So with that in mind, if you look at just the implementation component, you can do it yourself if you have the time. If your financial situation is relatively simple, you can automate it. So by simple, I mean you don't have so much wealth and your tax situation is not so complex that you can do an automatic portfolio solution. You can do a transaction as needed. So that could be anything from getting a loan to actually just buying a piece of insurance, life insurance, or any other one-off type transaction. But if you have an ongoing need for implementation and you just don't want the hassle, that would be a scenario where you'd be looking to hire someone, get a long-term relationship with an advisor. If you're looking for advice, if that's a big part of what you need, then if you like to do your own research, you can pretty much get all the answers online or from reading books. There's, all that information's out there, but it does take time. There's no automated solution for getting advice, of course. And if you're going to do a transaction, again, you can transact, and by definition of that, I mean basically hiring a financial planner just for a one-off situation. If it's simple, if you feel like you can get a financial plan done like this year, you probably don't need another one for 3, 4, 5 years because there's not that many changes likely to occur in your situation. If you have a fairly dynamic wealth flow in and out, a complicated life, then you're going to want the planning capabilities year after year, and then it might be more of a long-term relationship. Again, that's for advice. If you are looking for access to, again, these are, I'll call them not readily available investment opportunities. You can do it yourself if you are connected to the people that kind of run these strategies. Scenarios where that might work is if you already move in circles with other wealthy individuals, perhaps a country club. If you are in the tech community and you have people in the venture capital space because they were previous coworkers that had a successful exit out of their business or the like, you may have connections and you may be able to access some private deals that way. There's no automated version. There's no transaction version of this directly. If you are looking for continual ideas in this arena or access to a proprietary investment solution, then you need to hire or go with a firm that provides that. Concierge services, by its very definition, the only way to get these services is by hiring a firm to do it for you. So again, hopefully that's helpful. Again, if you focus on which of these 4 categories you're looking to fulfill in your circumstances, you can get a sense of, hey, can I do it myself, or do I want to do it myself? If both of those answers are yes, then by all means, do it yourself. Don't incur the cost of hiring somebody else if you can get it done and you enjoy doing it and you have the time. Okay, so with that in mind, once you've identified what it is you're looking for, if you think you can do it yourself, all right, the options open to you based on the information I provided in the last video, which was the breakdown of the industry. As you can see from the spectrum of services chart here, if you are only looking to implement it and you want to do it yourself, you've got your discount brokers and your robo-advisors are your best solution. Now, they are designed for people to do it yourself with minimum input from the firm. It's really a trading platform or an algorithmic trading system that's designed to help you achieve your goals, but without the daily input or any real input from human beings. Now, those platforms oftentimes have that as an add-on service. You can actually talk to human beings, but if you know you just want to do it yourself, that's the way to go. The advice only piece. If you just need advice, again, as I mentioned in the previous video, fee-only financial planners are a great resource for you. You're going to pay for exactly what you get, whether it's an hourly rate or a flat fee for a finished plan. You're just buying advice. So there's no ongoing costs. It's a very cost-effective way to get what you need. If you're kind of in that world where you really just need ongoing implementation and advice and maybe some access, the full service firms is the way to go. And then you're definitely looking to hire a firm. This is going to be a long-term relationship. Finding an advisor at a firm that's a good fit for you is going to be your priority. And you'll continue through the process, starting with steps 2, 3, 4, all the way up to 7. Same with the multifamily office and business management. Again, those guys are full service firms on steroids, basically. So there are a few situations, even if you feel like you are, your needs might push you towards the full service firm, the right end of that spectrum. There's just a few circumstances that I'll point out where you should reconsider doing it yourself. The first would be if you're fee adverse, you don't like paying fees, then you're going to have a hard time feeling like you're getting value out of the relationship with the person you hire. So again, if you are really sensitive to fees and you don't have a clear sense of value, then maybe you should just do it yourself, even though there's going to be additional time costs associated with it. It might be in your best interests. If you're still building your wealth and your asset value is relatively low, you're really not going to have a lot of options. As I mentioned in the previous video, there's like account size minimums that are necessary to work with full service firms. You're going to end up kind of in that do-it-yourself, the robo-advisor and the self-service platforms yourself. That's just the reality of the situation. If you enjoy managing your own stocks and bonds and other assets, then by all means, continue doing it. If you get joy out of doing something, don't hire someone else to do it for you. Also, if you have more faith in your own ability than in the ability of others, then that's another situation where you're probably setting yourself up for disappointment. If you hire somebody and through whatever circumstances it doesn't turn out as well as you had hoped, and in the back of your mind you're going to think, I could have done that better, it's going to be a challenging relationship. So again, reconsider doing it yourself. And then the last two is really just if the time that you spend doing it yourself has a lower cost than what you would pay someone else to do, well, then economically it just makes more sense for you to do it than hiring someone. And of course, last of all, is if you have difficulty trusting others, and that's a very personal issue. I only point it out because I have had clients that I've inherited over the years that fundamentally just had trust issues for reasons beyond the scope of my job responsibility. And it was a very difficult relationship. So if you're one of those folks, there's a lot of emotions tied up in money. As I mentioned in the first episode, you need to be prepared for the fact that you're going to have a negative emotional reaction dealing with someone who you fundamentally don't trust. So keep that in mind. And perhaps, again, you should be doing it yourself. All right, well, that's it for this episode. It was hopefully a little shorter than the previous ones, hopefully a little more palatable. Thank you for tuning in. If you found it helpful, please like and subscribe and let your friends know about it in the old-fashioned analog manner, if that's your style. For more information, additional content, copies of the presentation, please do visit the website, www.rightadvisor.com. That's RIGHT-advisor with an OR at the end, .com. And if you need help with your search or have a specific question that I didn't cover in this video, please feel free to email me, todd@rightadvisor.com. The next video in the series is going to cover step 2 in the process, which is advisor qualities and characteristics, what you're looking for in the human you'll be working with. So I hope you'll tune in for that one. But in the meantime, farewell and good fortune.